Well, howdy traders. Hope you had a great trading day, and what a day it was, right? For the S&P, we had 51 point move, pretty huge. It was a buy day today, and hopefully you got in on it just a little bit. We got a lot to cover, so we'll cover the S&P action. We'll cover some moves in Tesla and some of the open positions we have. We'll cover some longer term stuff that we promised we'd go over, some rotational things. So we'll look into that as well. All right, so let's just jump right into it. Or as usual, I plot the negative and major positive gamma exposure lines based on volume. Early in the morning, right after the open, usually I'll wait anywhere from 15 to 30 minutes to wait for that to happen. Today, we had Jerome Powell start to speak at market open. And right out of the gates, this thing just absolutely rips up. And, he was very dovish in his commentary, basically just talking about that there's disinflation. So they'll take anything that closely resembles a rate cut. So if that sounds like a rate cut to you, great. Sounds like it to me. Cool. Let's buy, 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 buy. but it's not only that, we had some the jolts. We had the jolts job openings data that came out, and it's pretty good. I guess if you looked deeply into it, wasn't anything super eye opening. We saw a lot of government jobs. That was, I think, the biggest category, but otherwise it was kind of sideways, really. So I don't think it was really that. I think it was mostly Jerome Powell. So, him being very dovish in his commentary, I think really helped push the market up. Also, when the man speaks, we usually see something in the 50-point range at the very least. So it's pretty cool that, he opens his mouth and then, yeah, all right. Now we started getting some gamma exposure lines, and one of them was the 54.50 on the downside. But if you recall from yesterday, we already visited that one and we hit it a few times. And now that we closed back into the weekly volume profile along with the daily, it is a low probability chance that it's going to keep coming back there. So especially with this huge volume node that's right here that came from the close from the prior day, what happens is we were just off to the races. And honestly, there was just one really good pullback, and that was right around 1040 was where it started, right into the London close. So it was really just the Euro guys probably just closing their positions. And, once we cleared 11, right back onto the races. And the first major gamma price level was the 54.90 level, and we hit that right around 12:20, 12:30. So it was going to be the 54.50 or it was going to be the 54.90. And once we started getting a clear trend here and not coming past these points of control, let me zoom in on that so you can see it. We have these previous day, previous week points of control. We cleared them and we really never came back through. That's a pretty good indication, especially in this nice green hammer we got right here, right around 11:10. That was a good indication that, okay, this thing is really going to try to reach for this 54.90, which it did. Pretty much touched it, came back for 10 minutes, and just ripped right back through. The gamma was off the charts. It looked like there were zero puts, there was zero short selling, there was nothing going on the bearish side. It was just all call buying all day long, and they did. So it hit 5,500 was the next level, and then towards the end of the last couple minutes of the trading session, boom, all the way up to 55.10. So yeah, heck of a buying day. It was pretty good for me. I tried a little trade here, got a scalp, but was pretty patient and got this level here and was able to ride the break of structure here and got a couple more scalps coming in. So it was all in all a good day. And yeah, in terms of the longer term positions that we have, we've got we had Tesla as well, so it was doubly that good. All right, so let's check out Tesla. As you can see, Tesla was a monster, and we'll just go to the daily chart on this guy. As we covered last week, once we broke through the bottom of value for the year, that's a big trigger. And with all this consolidation over the past 6 months, for this to close and stay supported here, that's a big deal. So it really is adhering to an inverse head and shoulders. And if you see it here, got the break, came back down, broke right back above, and coincidentally, that was the low of the yearly volume profile. We also had the vehicles delivered and the vehicles produced and delivered for Tesla, and they were all, I guess, beating expectations. That helps, and it's also helping that earnings is right around the corner, so you're getting that double effect of, or maybe even a triple effect of, maybe anybody that was short is now buying back shares or taking off those short positions. The news is good. It's back into the value area, and earnings coming up with market makers pumping up those premiums, make it more expensive, and people are buying. It just keeps driving the price up. And our next target is going to be somewhere around the 250 zone. I would say 247 is what I'd like to see again. Obviously, we just keep taking out all these red candles here from the daily, right? So hopefully we can start clearing those guys out and start hitting the rest of our targets. But so far, again, I mean, this is a monster move. I think we're over 17% since entry. The stock options were for the, believe they're the 24th of July. Yeah, I think that's the next one. Those are up like 500%. Wild, absolutely wild. So, it's been a while. Tesla, thanks for waking up and being a beast. That was very cool of you. Anyways, all right, let's go to what is our another position? We have Roku. Didn't do a whole lot today, but it's okay. It's been on a tear, so we're already up 10% on that. It kind of stopped where we thought it might, so we got our first target. We would really hope for some continuation out of this. If not, we can start inching up our stops so that at least we can get break even. But as of right now, we're not going to cut anything. We're going to let our winners run, and at least until earnings. So keep an eye on that one. All right. Now let's see. Maybe we go back to. Let's go to the SPX. Yeah. So yeah, just going back to the broader market. What we're seeing now is we're going right back up to the highs. It clearly looks like that. Looked like we just did some sideways consolidation, came back through. I mean, I think a lot of people, not only on X, but in social media in general, or even just most stock market participants were just maybe even hoping for a little bit of a pullback, but not yet, they said. So you've got Jerome Powell just basically saying, look, I'm going to keep the pedal to the metal. And that's what's going on. So you keep that hope that the rates will get cut. That just keeps juicing things. So that's what's going on there. And so let's talk a little bit about maybe where people might be positioning at the moment. And with the that disaster of a debate last week, we can kind of assume that people are leaning towards another Trump administration, which would mean a lot of different things in terms of where people would start placing their money again. I mean, when Biden started, obviously the clean energy, we had, solar panels, we've got all kinds of um, clean infrastructure. A lot of energy transition policies were put in place. That's actually a big deal. And when the market kind of foresees maybe that it might be a pretty clear winner in Trump, but we don't know yet. We don't know, at least for now. We don't know what's going to happen on the Biden side. They may decide to go with somebody else and totally shake it up, which would be probably not the greatest thing for markets, because then there's a whole lot of uncertainty, and then they're rotating out and putting a bunch of hedges on. So that would shake things up in the market quite a bit. But if things are as of today, and maybe Trump is the front runner, it makes sense to start rotating out of a few things. And the first thing that clearly I've been rotated out of are the solar panels, or the solar energy industry. And boy, has that thing just absolutely tanked. We also have just the ICLN clean energy. Also, it's almost like they knew this was going to happen, so they've been dumping that. We've got well below the yearly value here. It's not looking great. Until we can kind of recapture that, I don't know that. Well, until the clean energy guys, they can recapture maybe the yearly, it's going to be difficult for them. So on the other side of that, like I know the weed guys, that may not be happening again. So and I don't know that a Republican Trump administration is really going to stand for that. So you've got a lot of rotating out of that. It's coming back through the year. This also kind of triggers the 80% rule, which basically says if it's closed outside and it comes back through the top of value, then you've got a pretty good chance that it would go all the way back down to the bottom of value. But again, it's staying above its point of control, so we still need to watch on that. But it would make sense for maybe the whole legislative process on weed maybe gets shelved, or something happens with that. But not looking great now. Maybe we see a bounce. Maybe policy changes. But that's what I'm saying. There's a lot of volume that's just coming out of that industry. So the other one is home builders. That one's kind of looks like they're taking profits there. What's that? XHB, right? Yeah, it looks like that one's coming off a little bit. I mean, it just had a great run, even like in such a high interest rate environment. They did really well, is because they could control the supply, and they can offer their own discounts on newly built homes. And maybe they're just saying like, well, unless we get better rates, maybe we just go sideways, or maybe they're just taking profits right now. But that's not the greatest look. There's still, you'd like to see that kind of have some support here. Could just be a temporary pullback. That one's a very tough one for me to say yes or no on, but I'm just seeing a lot of volume come out of that one. Now, going back to a different administration's policies, you got to think, Trump is a real estate guy. So there's a lot of things that really kind of, get impacted by that. And I think one of them, right, is the commercial side, which is IYR. This is a commercial real estate ETF. And this has got a pretty good look to it. It's still in the yearly volume profile, just kind of chopping sideways, but it's really coiling hard. And let's see if we see anything else. let me catch our eye here. Yeah, so on the month, it says the monthly 80% rule because it did come back through, but it got through most of it and it's bounced off some point of controls here for the month and has bounced right back through this top of value for the week. And actually, it looks pretty good. And there's a lot of volume that came through. So I just wanted to point that out. So, is commercial dead, with all the people that wanted to work from home and everything's changing. But if you have this new administration that comes in, they can do all kinds of creative things with commercial real estate to make sure the losses aren't as bad, and maybe even more people go into the office. So you see that with a lot of commercial real estate are actually supported by regional banks. So if you look at the regional banks, they have been absolutely flying. Yeah, isn't that weird? Like banks, these small banks who have usually make a lot of their money on commercial loans. So yeah, you see them doing quite well, and a lot of volume coming into these guys as well. So you can see the spikes up here. Let me just get this back down. Again, we got another little consolidation pattern above the year. So that's a pretty good sign. If it can stay above, yeah, it's got a lot of room to run, as you can see, because of the commercial real estate debacle going on. These guys have found some support, and if we can continue to stay above, and if a new administration comes in with some very lenient policies on how commercial real estate gets treated, awesome. That could be a good long-term strategy here. So the other thing is, when it comes to, where the Fed's at, obviously being dovish. If a new administration comes in, then we're talking about like, hey, what other industry groups would be positively affected by a more lenient, interest rate environments, more lenient on private equity or real estate, and that would be like the PE guys. So those folks like Apollo Group. Uh, these guys are super strong, and I'm not saying that this is a good buy point, but the industry as a whole they would really benefit. And it looks like they've already kind of front run a lot of this. Um, if you think about the market now, a lot of the volume, there's a lot of concentration in the mega caps, like the Magnificent Seven, your Microsofts, your Apples, your Googles, whatever. I mean, there's a lot of market cap stuck in there, trillions of dollars, and they're really high valuations. So, I guess the thinking is, these guys, even though they might be leveraged a bit, maybe they've delevered a little, but they have a lot of private businesses, and maybe there's a lot of demand amongst wealthy individuals, people that have fairly large portfolios that want to move their money around. These guys have a lot of private companies in which they can deal, and they need the liquidity too, because going to market isn't what it used to be. So this could be a big thing that continues to go, but I would just be very selective of entries and just kind of keep a pulse on the industry. It's just an idea, right? I think just reading some of the transcripts on these guys, I mean, they've really got a pretty cool business model, and it seems as though they're like water. Whether interest rates are up or down, they can really strategize and position themselves to benefit in a pretty remarkable way. So just keep an eye on that. I would say another one that might be a little bit out there, but I've also seen some rotation or some flows into it, is XBI. So if we think about biotech in general, super risky. Just a wild industry, really. But with the advent of AI with machine learning really helping deep sciences get to answers quickly, this space actually could be poised for something much bigger. And when we had a fairly large rally back in the 2020, that thing absolutely ripped. And with this technology that keeps advancing, I think a lot of people think it's hype. Some of it is, some of it absolutely is not. It really does help, especially in a laboratory setting, and being able to cycle through experiments faster and uncovering things at a faster pace. And I believe XBI and the whole biotech industry is going to have, they're going to benefit greatly. A lot of partnerships are being made, especially with these small, like test research type companies with the bigger, pharmaceutical companies. So, this space could be poised for some major movement, regardless of the environment. Just because, this will be tech, this will be health, and longevity, which are all long-term plays here. And the fact that we've got, from a technical perspective, looks like we've got some support here, and we are above the yearly. We're above the yearly volume profile, and getting some support there. It's not crazy or anything, and in fact, I think it's like maybe up 1% for the year. It's something like very negligible, but I wouldn't mind taking a swing on something like this. There are lots of companies to look at. I mean, as an industry as a whole, this is probably the safer bet, just because the one-offs, I mean, they can go to zero in a matter of seconds if they have some bad data. So it's probably better to be diversified within the industry, but you get a few bangers out there and boom, the whole industry's off to the races. So there's some things within this that look really good. So going back to like the commercial real estate plus biotech, you're looking at maybe a company called ARE, which I'm definitely looks a lot like another inverse Head and Shoulders here. Of course, everything can look like an inverse Head and Shoulders after seeing it everywhere and seeing some, at least after that Tesla move, right? This one looks pretty good as well, but this one's probably not going to move like a Tesla or anything like that. This is a real estate REIT company, ARE, but they do a lot of work with biotech. So, and you got to imagine, I mean, those guys, they have to come to the office. They got to utilize the space. And, if the technology proves out, then they're going to get funded. And, it's just, a complement to what I was thinking with XBI. And, that's kind of what I'm looking at right now. I mean, I think the big story is what things are getting rotated out of. And again, it's like the clean energy stuff, a little bit on the housing side, the marijuana stocks, that kind of stuff is just, what was kind of a Biden pump is now kind of being rotated out of. And we're seeing a lot in, the financial industry. We're seeing real estate, some basic materials. It's, so another one that I almost forgot was XOP. So if you're thinking that, hey, everyone's cycling out of the clean energy, well, why not in exploration and production? So that's another one that I've seen some pretty good rotation into, and it makes sense if you think, if clean energy is on the way out, then hey, oil and gas production and exploration in a new administration could be another bull market for them. We just have to keep monitoring, make sure that volume and price action in time is supporting of our thesis. And yeah, we should be good to go. But at the moment, just a couple of those swing plays for right now. We've got Tesla, we've got Roku on a kind of a small position. But yeah, some of these that I've just called out are some of the things I'm looking at and thinking about what might be a really good entry point. Some of them are just about there, and I will be reviewing not only my day trades, but also some of the longer term stuff, position and swing trades. So yeah, make sure to subscribe, make sure to hit the alerts, and I will see you in the next video.